In a previous video, I suggested this. If I were age 35, earning $6,000 and single, I would buy a HDB resale flat to get rental income to accelerate towards financial freedom. Today in this whole discussion, I'll be answering deeper level 2 questions, which will include, is there an angle that condo is better than buying a HDB? Or should I buy a BTO instead of a resale flat? And last but not least also, why not advocate buying stocks instead, like what I've done? Towards the end of this discussion, I'll also be leaving 2 powerful tips as to how you can become a better investor in the financial market. So if you're keen to find out more, continue watching on. Hi guys, welcome back. Without further ado, let's start by answering the first question. Should you buy a BTO or resale? Now, if you ask around friends, family members, you will also hear of stories that for anyone who has bought a BTO or resale, that they have made capital gains, correct? I think that has been universal across, regardless of whether the property market cycle was up or down. What I've gathered on the ground is when you buy a BTO or EC flat, it's almost impossible to make a loss. Buying a BTO, in my opinion, is probably one of the most probable ways whereby you can turn $30,000 into $300,000. How does it actually go? If you buy a $300,000 BTO flat, which means previously 10% down payment, $30,000. Right now it's 15% down payment. So using that formula, someone just need $30,000 as deposit and will be able to purchase that BTO flat by servicing a monthly mortgage. 5 years later at MOP, minimum occupancy period, that person or that couple could sell their flat at quite possibly $600,000. I've seen so many stories of that, and maybe you have also been through this journey yourself. And my guess as to why BTOs and ECs are almost a guaranteed profit is quite possibly the resale market for these new flats when they turn MOP is just very strong. Singapore governments have actually a lot of resale grants, which enables higher purchasing power, and naturally when people want to look for new flats, this flows on as very strong demand. That's why a lot of BTO and EC homeowners are able to upgrade. But actually, the same cannot be said necessarily of buying a new condo. Let me show you an extreme example. This is actually Skyview condo in Bishan. I picked this case simply because this launch was close to the previous market peak in September 2013. You will see that someone who has bought during the launch in 2013 could be buying at close to 1,800 PSF. That again is the highest price recorded, and comparing vis-a-vis, this case study has shown that it's possible to actually still be experiencing a capital loss even after 6 or 7 years. Do take note again, Bishan is in a fantastic location whereby there are many good schools around there like RI and Cat High. But if you compare that to anyone who has bought a BTO in 2013, you will see a very different trajectory. But the question again is BTO better than resale or not? Now, there is always firstly a qualifying criteria. There's an income cap to whether you can buy a BTO or not. Not just that, families who are concerned about the waiting periods for BTO, which could take several years, as well as not having too much luck in terms of their bidding process, may have to gravitate towards the resale market. On the other hand, for someone who is single, the BTO route has very few options. They can't buy a 3-room, 4-room or 5-room BTO flat. And income also impacts something else. And this is actually a great question asked by Kelvin. Would you still stick to this strategy if you have $0 in grants? Now in that case study, the dynamics was single, age 35 and $6,000 income. Therefore, a $40,000 housing grant can be qualified. Which means also, if I were to buy a $400,000 resale HDB flat, 40,000 grant means about 10% that is being paid by government. That sweetens the deal tremendously, which means also, if right now I buy at 400,000 and I sell 10 years later at 400,000, no capital gain, actually factoring that resale grant, there is already a gain to it. Now many people will definitely rebut that to say that, hey, what about resale levy and stuff? Take note again, resale levy is only when you buy a second subsidized flat, which means if you go and buy a BTO or go and buy an EC, and the simple way to avoid that is to buy another resale HDB or go to the private route. Then you don't need to pay back that resale levy. If we were to pull out the charts again, for someone who is single earning $6,000, the CPF housing grant alone is $40,000. Proximity housing grant is $15,000. Double that if it's a couple buying a flat. This equation is way more favorable than buying a condo. Now that leads to the second part of today's discussion. Is there an angle that a condo is better than buying a HDB flat? And before I get there, let me smash the like button because it has taken our team hours to prepare this presentation for you, and hopefully it has nuggets of wisdom that impacts you positively in your own financial journey. Now many people say that HDB, 99-year lease and stuff, but actually many condos are on 99-year lease Freehold condos are actually not the majority of the equation. And not just that, PMD has actually recently stated that every HDB flat will be a valuable nest egg for retirement. There are also a few positive points to raise up again owning a HDB versus a condo. Firstly, the monthly expenses are way lower because this adds to the property rental yield if you're looking from an investment perspective. This is because the property tax is lower, HDB's value is lower. Not just that, the conservancy charges owning HDB is just so little versus a condo, which could have not just maintenance costs, it could also have sinking funds once the condo becomes old. Second point, rental yield for HDB is definitely better. The HDB flat that I've sold could have fetched me 7 to 8% in terms of rental yield. And if you look around the condo landscape, you realize it's only 2 to 4%. Third point, if your income allows, buying a HDB flat gives you the option of taking the HDB loan, which is 2.6% flat. On the other hand, if you buy a condo, you have to take a bank loan. And DBS's fixed rate as of this point of filming is 4.25%. And this is actually very different from yesteryears because previously, before 2020, you would realize that bank loans were way cheaper than 2.6% HDB loan. But loan is actually one of the key strengths owning a condo. Let me explain something to you that you may not have heard of before. If you own a HDB flat and you fully paid off, you are unable to take a new loan for it, correct? That's why some people are a bit reluctant to pay off their HDB loan because they are not too sure whether they need their CPF or they need their cash in future. On the other hand, owning a private property does allow you to still take a loan even after you have fully paid off your loan. That is actually done through a term equity loan out. I've actually done a previous video as to why I actually borrowed out $150,000 from my condo, and that was actually done when interest rates were low. Which means also, in future, if interest rates come down again, your condo or your private property can actually become a piggy bank for you to take out term equity loan, subjected of course to the terms and conditions of the bank loan itself. But I've seen private clients take out several $100,000 or several $1 million out from the private property because it's appreciated and loan costs were low. That is a key angle as to why a condo could be better than owning a HDB flat. Again, if you have questions regarding that, leave in the comment sections. I'll try to help pick up, because I'll next move on to the final question, which is one of the most important. Why not advocate buying stocks instead of buying property? If we see this chart over here, you realize that the green line over there, S&P 500, has outperformed all asset classes, including real estate. The measurement of that study was from 1928 all the way to 2017. On the other hand, if you look at a different study, you will also still see equities as the best performing asset class, but gold comes in a close second. Properties have delivered positive returns, but remain at a distant third place. So in terms of which asset class is better to own, it really depends on when we are measuring that, correct? These studies, we also don't know their agenda, but my guess is in general, property as an investment's biggest strength is in leverage, cheap leverage to be specific. And when the values of properties don't plunge 50% or 30% over a couple of months is relatively stable, using it as collateral is much safer, which relates to just now the topic, taking out term loan from the property. Because again, when you pledge an asset, if the asset value drops, you may need to make in equity refunds. Leverage is also the very factor as to why you hear stories of big capital gains of people who have owned properties. Stocks, on the other hand, has this huge problem, which is volatility. The best example can be seen during the COVID period in February 2020 to March 2020. In just that 1 month, S&P 500 actually plunged 30%. So for someone who is not familiar with stock market volatility, this rapid drop in 1 month is very scary. And volatility usually leads to mistakes such as cutting losses wrongly and not focusing on the long term. But speaking to this point, I've actually found something very interesting. I've always assumed that properties not having a daily price is actually a benefit because you have to hold it long term and there's just not too much volatility. But little did I realize, looking closer at data, that there's a potential problem also owning properties. Let me use my old flat again as an example. I'd like you to focus on September 2022's transaction. That's not a first floor sale, it's just a low floor sale. And the quantum was $335,000, which equates to $472 per square foot. If you compare it to what I've sold as well as some of the previous transactions, you will realize that that per square foot is easily 10% below market value, correct? So the question again is, why so urgent to sell? Is there a need to upgrade urgently? Is it that the existing owners have deceased and whoever is benefiting from it just wants to dispose it quickly to cash it out? Or is there divorce? Or is there some other financial distress that requires the family to sell it off quickly? But that's actually not the worst. If you scroll down a bit further to January 2021, you would realize that quantum was $275,000 which equates to 387 per square foot. In September 2020, it was only transacting at 270,000, which equates to 380 per square foot. For these two homeowners, if they have held on for an additional year, they would have realized an extra 30% easily on their value. Properties have low transaction volume, which means it's relatively illiquid. Unless there's a bull market like what we're experiencing right now in the residential property markets in Singapore, there is some bidding from aspiring homeowners. Without such a situation, my guess is that even though the property may have appreciated in value, a homeowner may not be able to extract all the capital gains out that easily. I think this is an interesting finding and further food for thought, especially if you're interested to do property investments. But let's draw back to today's key question. Why not advocate for stocks? In this scenario, earning $6,000 and at the age of 35. My gut feeling is that buying the HDB resale flat, which is what I presented, is still one of the most powerful ways to get to financial freedom. Simply because rent income is just very simple, and rent income is a key way to expedite that process. But you viewing today may not be at the age of 35 yet, which means this whole formula cannot be used. Or your income level is above $6,000, which means some grants and possibly the HDB loan does not apply to you. Then this is how I advise, especially if you're looking into the financial markets. Firstly, focus on compounding income and looking long term. Forget about capital gains. For properties, it is related a lot to macro trends such as interest rates, population growth, redevelopment of the area, cooling measures by government, supply and demand. There are so many factors that could impact your journey negatively that many property ads refuse to admit to. So for properties, the safer route will be to focus on the cash flows. What about for stocks? Focus on the dividend income. Focus on the business fundamentals. Because we're never sure when the next bull run exactly is. This is a quote by Warren Buffett. I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen for 5 years. Focus on the dividend incomes coming in. A second and further tip. When planning investments, plan big sums and commit to it long term. When we buy properties, easily it's $500,000 and we talk about a 25-year loan. Use that same principle to committing big sums and committing to big durations. How about this as a roadmap? If you want to commit to $500,000 in capital, that would mean $1,667 per month. There will be market ups and downs, there will be crashes, there will be bull runs, but what you'll see at the end of the journey is very likely more than $1.2 million in your portfolio. Get used to thinking big sums for your investment portfolios because that's a key source for your retirement expenses. If you agree, as always, smash the like button. I'd like to invite you to one of my previous tutorials. How much to retire in Singapore? Could it be $1.6 million? If you are keen to find out on that tutorial, follow on with this and I'll see you there too. Take care as always. Goodbye.